Rick, let's talk about this chart for Nvidia. It's so interesting, the cycles that we've seen this company, and there were many companies who went through this from those lows that we saw earlier this year, April-ish, to where we are now. What do you notice in terms of the trends?
Yes, very true. A good example of how fortunes can wax and wane in the stock market here. But for now, as of Friday's close, this doesn't reflect our pre-market move here. Nvidia was up about the same as the broader SMH sector, our ETF that tracks that particular area. And then we can also see the tech sector in S&P XLK up 34%, S&P up almost 20% here. But you also have to consider Nvidia versus its peers in the Mag 7 here. So we can see it's outperforming there as well. Something that I thought was pretty interesting, the Mag 7 stocks make up about 37% of the S&P 500's market cap right now. So we're becoming increasingly concentrated in these relatively few numbers of stocks here. But anyway, so if we were to look at our yearly chart here, Nvidia has been traveling in an upward sloping shape here, kind of a rising wedge, not exactly two parallel lines, but the upper line being a little bit more shallow of a slope here. Nevertheless, we broke out to the upside, our new short-term range right about here, 201 to about 212, 201.03 being the best close that we had before our gap up. Other horizontal levels to consider include right here near 195. That was another intraday high point here. And then our old ceiling that we saw here near 185 on the way to that breakout. So if we were to look at some of our other studies here, we can see that our moving averages, we have outpaced them pretty significantly here. The closest one being our yellow 21-day EMA. We also have our orange 63-day EMA as well. Those come in at about 190 and 180 respectively. Our trend line is between those two lines as well, and also roughly lining up with that 185 level we mentioned. So that looks like it could be a noteworthy supportive level. RSI backing off a little bit as well. We are no longer in the overbought area as of Friday's close, but if our price action remains strong today, we could see it re-enter. That would give us another bullish signal for this momentum indicator here. Finally, when we look at our other studies here, we can see that volume profile shows our biggest node is right around here where we had our breakout point. So that area near 180 really stands out as a potential congestion area to the downside here. Our +1 standard deviation channel, one standard deviation above our blue linear regression line right here, that comes in right around 205. So that could be a further resistance point to consider here. But actually with today's pre-market move, we are a bit above that point. When we overlay the November 21st expected potential move here, we can see it comes in around 227 to the upside, 185 to the downside here, reflecting that we have that heavy supportive area here. So plus or minus 10% or so is what the options market says for this one.
According to at least one analyst, Nvidia can increase its worth by trillions more after becoming the first firm to ever surpass a $5 trillion market capitalization. On Monday, Loop Capital Markets increased its price target from $250 to a street-high view of $350. The revised goal suggests a market valuation of over $8.5 trillion and marks an increase of over 70% from Nvidia's most recent finish of $202.49. $231 is the average target. In pre-market trade, shares increased by 2%. The stock is up more than 50% this year, outperforming the 45% gain of the Philadelphia Stock Exchange Semiconductor Index. Nvidia is at the forefront of another significant leg of higher-than-expected demand as we enter the second golden wave of Gen AI adoption, according to Loop analyst Ananda Barua. With the help of ASP expansion, Nvidia is set to launch a Blackwell graphic processing unit chip ramp that would effectively double its unit sales over the next 12 to 15 months, according to Barua. Rosenblatt Securities also increased its price objective for Nvidia from $215 to $240, citing a recent conference the company conducted that revealed it has an astounding $500 billion plus in Blackwell orders through 2026. According to Kevin Cassidy, we are still pleased by Nvidia's AI platform's quick expansion into sectors outside of hyperscale data centers. The increased optimism before the release of Nvidia's earnings on November 19th. Results from other mega-cap tech firms last week also demonstrated how important Nvidia clients, such as Amazon.com, Microsoft, Meta Platforms, and Alphabet, are all still dedicated to their aggressive AI spending. The main supplier of computer units in the AI arms race is Nvidia. The sale of Nvidia's chips is still prohibited in China. In comparison to its large tech contemporaries, the stock isn't that pricey. In the field of AI investments, November can be a pivotal month. November is when a number of significant corporations release their earnings, and the picture they portray will give us a crucial idea of what the sector may look like in 2026. Even though there have been rumors of an AI bubble developing, I continue to believe that this sector has a lot of space to grow for a variety of reasons. As a result, one of the top-performing AI stocks since the start of the AI weapons race in 2023 will rise. As a major player in the AI arms race, Nvidia's stock may see a number of favorable catalysts in November. It's in a strong position to grow in 2026, in my opinion, and now would be a fantastic moment to buy shares. Graphics processing units, GPUs, produced by Nvidia, are excellent for high-performance computer applications. In the past, GPUs have been employed for a variety of functions, such as mining Bitcoin, processing gaming graphics, and engineering simulations. Applications for artificial intelligence computing have been their largest use case to far, and Nvidia's GPUs have performed exceptionally well in this field. Some of its rivals have revealed agreements with ChatGPT's creators, OpenAI. Some investors are now questioning whether Nvidia is losing its hegemony as a result of this, but I believe the answer will be revealed on November 19th, when Nvidia releases its fiscal 2026 Q3 results. Nvidia, one of the businesses that announced a partnership with OpenAI, is anticipated to post robust growth once more and surpass advanced micro devices. Even if Nvidia loses some market share, it will still be the preferred option for AI computing hardware. Nvidia projected that current global data center capital expenditures will reach approximately $600 billion in 2025 during the company's most recent earnings call with analysts. By 2030, though, CEO Jensen Huang anticipates that sum to rise to between $3 trillion and $4 trillion. Nvidia can afford to lose some market share and still turn a profit because that's a sizable pie. Less attention is paid to the fact that Nvidia has yet to receive an export license to start selling its H20 chips, which were specifically designed to comply with export regulations imposed by the U.S. government. Nvidia lost a significant customer base earlier this year when the Trump government withdrew that license. Nvidia has talked about obtaining a license and paying an export tax for these, but it hasn't been approved yet. Given that this license might be utilized as a negotiating chip in the ongoing trade talks between the United States and China, Nvidia may soon receive good news on the matter. The stock will react favorably if Nvidia's chips are permitted to be delivered to China, as this would greatly expand the company's operations. Despite certain misconceptions, Nvidia isn't that pricey, and there are many possible catalysts to increase the stock throughout November. With a forward price-to-earnings ratio of 29 times next year's earnings, Nvidia's stock isn't the cheapest on the market. Nevertheless, Nvidia's valuation is obscured when compared to its competitors. In terms of valuation, Nvidia is about in the middle of its large tech competitors, demonstrating that, when future growth is taken into consideration, it isn't actually that costly. Nvidia still has a lot of opportunity to grow, in my opinion, and the stock might see some encouraging news in November. Even though Nvidia has already seen a number of prosperous years, I think the AI arms race is still ongoing and will continue to generate profits for years to come. According to a senior official who spoke to Reuters on Monday, Microsoft has permission from the Trump administration to export Nvidia chips for its data centers in the United Arab Emirates, and the company plans to invest more than $15 billion in the country during the 7 years ending in 2029. By using its strong ties with Washington to gain access to American technology, including some of the most cutting-edge semiconductors in the world, the UAE has been investing billions of dollars to establish itself as a global center for artificial intelligence. In an interview, Microsoft Vice Chair and President Brad Smith stated that the growth of AI data centers around the United Arab Emirates is by far the largest portion of the investment, both in the long and short term. On the fringes of the AD/IPEC Energy Conference in Abu Dhabi, he stated, "From our perspective, it's an investment that is critical to meet the demand here for the use of AI." Last year, Microsoft paid $1.5 billion to acquire a minority position in G42, an AI startup based in Abu Dhabi. This gave the U.S. tech giant a seat on the board, which Smith currently holds. But because of worries about Beijing's access to cutting-edge semiconductors, especially through third parties like the UAE, G42's previous ties to China have come under scrutiny in Washington. Last year, G42 said that it was collaborating with the Emirati government and U.S. partners to adhere to AI development and deployment requirements. G42 has made enormous progress in putting in place the systems needed to adhere to U.S. law, according to Smith. In response to a question about whether the Abu Dhabi company would have direct access to the most cutting-edge American chips, he stated that he believed that was a possibility for G42. In a different blog post on Microsoft's website on Monday, Smith said that licenses granted by the Biden administration last year enabled Microsoft to amass 21,500 Nvidia A100 GPUs in the United Arab Emirates, which are based on a mix of A100, H100, and H200 processors. He said that after the administration updated technology protections, the Trump White House authorized for export in September an amount equal to an additional 60,400 A100 chips incorporating Nvidia's more sophisticated GB300 GPUs. Smith told Reuters that although the chips covered by the most recent certifications have not yet been shipped, they would be utilized in its own data centers in the United Arab Emirates in a few months. By the end of this year, Microsoft will have invested $7.3 billion in the United Arab Emirates between 2023 and now. He stated in his interview that an additional $7.9 billion is set aside to be spent between the start of next year and the end of 2029, including for the continuous and anticipated growth of cloud infrastructure and artificial intelligence. Stargate UAE, the initial phase of one of the biggest planned data center hubs in the world, will not be involved in any of the $15.2 billion investment revealed on Monday. The Abu Dhabi-based initiative was revealed in May while U.S. President Donald Trump was in the Gulf. Nvidia began as a tech company that specialized in gaming GPUs, but its dominance in the market opened up enormous growth prospects. Nvidia had a significant advantage in AI processing because of its dominance in cutting-edge GPUs. The company's wins in AI have translated into incredible gains for shareholders over the last 5 years. Over the past 5 years, Nvidia has undergone a remarkable metamorphosis. For the first time in 2020, the company's data center segment sales started to surpass its gaming section revenue. Its graphics processing units for gaming and data centers had remarkably similar fundamental architectures. Coincidentally, the GPU technologies it had created for gaming could be modified and enhanced to do intricate calculations for data center-based distributed computing. The company's proficiency with high-end GPUs also put it in a prime position to lead the hardware revolution in artificial intelligence, AI, and generate amazing profits for investors. The stock of Nvidia has produced a dividend-adjusted total return of around 1,490% over the last 5 years. Investors who made a $1,000 investment in the stock 5 years ago and adopted a buy-and-hold strategy would now have a holding worth over $15,900 with that rate of return. Recently, Nvidia became the first firm to exceed a $5 trillion market value, and it may continue to be the most valuable corporation in the world for some time to come. The company's dominance of the cutting-edge AI processor market has been crucial to its remarkable valuation increases, and there are few signs that this advantage will be eroding anytime soon. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
All right, Tom, what's the approach you would take for an example trade for Nvidia given this Loop Capital move?
Yeah, they got earnings on the 19th, Diane. I think that's going to be a critical area, event risk around that date. So I want to avoid that date as far as earnings goes, because anything can happen, right? We could see a beat, a raise, and the stock falls. So I looked at a strategy that's neutral to bullish, that takes advantage of expiring but prior to those earnings. But then it's also a twofold type of trade where, hey, I'm comfortable owning the shares if the stock does fall back, or I just want to keep some elevated option premium on this cash secured put that's neutral to bullish. So went out to the November 14th weekly cycle, so it expires ahead of those earnings, and you've got about 11 days until expiration on this trade. So November 14th, I'm going to sell the 200 strike put. Cash secured put, you're going to collect roughly about a $4 credit if we open up here about $206 for the stock. So what does that mean? Well, if the stock remains above 200, I get to keep that $400 credit, right? But if the stock does fall below 200, I get to buy the shares if I'm still short those puts at expiration and it's below 200 at the break even of 196. That's about 5% below the current share price in Nvidia. So I'm giving myself that cushion to the downside here. Now, what's the max profitability on this? Well, it's the credit that you collect. So you've got to think about this in a couple different ways where, hey, I'm comfortable with that risk of 5% cushion to the downside where I can just keep that option premium, or you, instead of putting a $196 bid in for the stock and maybe never getting filled on that, this gives you that opportunity to buy the shares if it does go lower. You got a probability of that 200 strike put finishing out of the money at expiration of about 61%. So if you want to just keep that option premium and keep the $400 with the expectations the stock's going to remain above 200 into expiration over the next week and a half, that allows you to do it. Now, you do have a lot of risk if the stock were to somehow keep falling, so you've got to be comfortable owning the shares, and you got about $19,600 in risk if the stock were to somehow go to zero, which most likely will not happen. But twofold type of trade here, Diane, avoiding that earnings.